Hello, everybody. Welcome to a new episode of the Dissenter. I'm your host, Ricardo Lopes, and today I'm joined by Dr. Howard Friedman. He is a data scientist, health economist, writer, and artist. He teaches at Columbia University and has decades of experience in the public sector, private sector, and academia. He has authored or co-authored about 100 scientific articles and book chapters in areas of data science, applied statistics, health economics, and politics. His most recent release, Ultimate Price, The Value We Place on Life, has been covered by major media including National Public Radio and the journal Science, and is being translated into a number of foreign languages. So, Dr. Friedman, thank you a lot for taking the time to come on the show. It's a pleasure to have you on.
Oh, thank you. It's a pleasure to be here.
Okay, great. So your book is very interesting because it talks about something that I guess most people don't think about that much. That is that, in a way or another, we have to place a monetary value on human lives in different sorts of situations. And that's unavoidable, right?
Well, that's the interesting thing. If you start stepping back and realizing it, dollar figures, or price tags, I should say, are put on human life at all times. Businesses do it, regulatory agencies, healthcare does it, life insurance, yet we're somewhat oblivious to it. We don't see it, but it has major impacts, and often these price tags are very unfair. And there's a real reason why we need to pay attention, because the truth is, lives that are less valued are less protected, and lives that are more valued are more protected.
Mm-hmm. Yeah, we will get into the discrimination later in the interview. But in the book, you talk about the concept of the value of a statistical life. Could you tell us about that? What is it about and how it's calculated?
I'll definitely tell you about it, and full disclosure in my book, I'm pretty critical of it. So I'm not a huge proponent of it. But basically, the idea is when you go to the marketplace and you want to buy milk or eggs, it's very easy. There's a market for that. The value of a statistical life tries to get at the question of how much do we value our own lives? And so there's a few different ways that they touch on that calculation, but it's meant to then be used to figure out how much should we value other people's lives. So it's about our own self-assessments at a population level.
Mm-hmm. How is it calculated, or does it vary according to the type of situation we are talking about? How does it work exactly?
It's a great question. I think one of the challenges is it varies based on how it's calculated, the people you are looking at. There's so many factors that play into it, but there are many different ways that people look into calculating it. One way they do is they do surveys. They ask people simple questions related to risk. For example, they might ask someone, how much are you willing to spend to avoid an increase of death of 1 in 10,000? It's a very hypothetical question. And the people who are willing to stop and answer that survey question are, not your average person. I know I'm not stopping in the middle of the street to answer that question. More importantly, if the answers don't fall into kind of the researcher's preset mindset, they'll tend to discard them. If someone says that's an impossible question, infinity, they'll throw out that respondent. So that's one way to do it. There are other ways as well. Do you want me to go into some of the other details?
Yes, because I think it's important for people to have a clear picture of what we're talking about here and how it's done.
Okay, so we've got that survey-based method, which has lots of biases to it. Like I said, who's going to actually respond, the way the question's asked, and the responses get discarded. So there's survey methods. There's another way that people look at it, which is looking at wage-based risk. The idea behind this is if you look at jobs and one of them has more risk of death, right? It's a more dangerous job. The idea is that in a free and open market, employees would demand to be paid more to take on that risk. Of course, once again, back to the flaws in the argument, people don't know how much more risk they're taking on. Not everyone has the ability to negotiate. Sometimes you have to take the job that's there. So that one also has a lot of flaws in its assumptions. Of course, in that case, you're talking about how much more you have to pay me to take on risk. The other way to look at it is, how much am I willing to pay to reduce my risk? So you look at how much people are willing to pay extra for safety devices, things that make, let's say, their cars safer, or the extra cost of a better bicycle helmet. Now, once again, people don't know really how much the risk they're reducing. So they don't really understand what's going on in the calculation. And a lot of that is based on the ability to pay. Someone with more money is more likely to pay for safety devices. That doesn't mean they necessarily believe their life is more valuable. It means they have more money.
Mm-hmm. And okay, so this is a bit tricky, but in different situations, people place different values on human lives, and there are instances where they discriminate between different lives, right?
Absolutely. So, many different circumstances, these price tags are placed on human life, and they don't put the same price tag on everyone's life. I can give you examples from the September 11th Victims' Compensation Fund, if you'd like, as a starting point, and we go from there.
Yeah,
So,
that would be good. Yeah.
so after the September 11th event, a Victims' Compensation Fund was created by the United States government. This was a large pool of money, and it was administered by someone named Kenneth Feinberg. He was told that he needed to distribute the money in a fair way while accounting for economic considerations. He created a calculation. The calculation said no matter who you are, the human life is worth at least $250,000. He then added extra amounts on depending on the number of dependents. So if you had more children, your life was worth more. And then he multiplied it by income. And this is where things really started to explode. So the net result was that some lives were valued at over $7 million, while other lives were only valued at $250,000. Some lives were worth more than 30 times that of others. And even the largest payout didn't go to the family of a victim who died, but rather to someone who lived who had a very serious injury.
Mm-hmm. But people might interject that, I mean, perhaps those differences are fair in some way, because we are dealing with people that live different lives, that have a different number of dependents and things like that, right?
Oh, absolutely. There's two strong arguments, right? One strong argument says the amount of money that should be paid out reflects things like the survivor's needs. What does the family need to continue their lifestyle? That's sort of how life insurance thinks about things a little bit. But there's another argument that says that all lives should be valued equally. After all, this was government money. This wasn't private money. And why should the families of some victims basically receive a lottery ticket of over $7 million? But the thing about when you use income as a basis for valuing a life, at least here in the United States, there's lots of inequalities. And I think there's inequalities in many, many countries related to gender, right? So men and women of the same education, same background, on average, the man will earn more, right? So if you use income, you will then conclude the man's life is worth more. But that's based on this initial inequality. There are other inequalities. I'll give you an example. We have, in the United States, race-based inequalities. If you have two people with a high school degree, and one's black and one's white, black person on average will earn about 25% less. At the college level, same thing is true, and at the graduate school level. Now, there are other inequalities that are international. There's location-based. So, as you mentioned in the introduction, I do a lot of work in data science. Data scientists in, let's say, Portugal, there's some great people there. On average, though, their compensation is not the same as the data scientist who's working, let's say, in New York or in Silicon Valley. Now, the truth is, especially during COVID, people aren't physically going to offices anyway. The work is geographically independent. but the compensation, how much you get paid, depends on the location. There's also age-based biases as well. So income, it's one way to measure, but the problem is it has a huge amount of biases. There's another huge issue about it, which is, at least in the United States, the incredible salary range. If you earn minimum wage in the United States, you would earn only about $15,000 a year. That's 15,000. Meanwhile, people who are leaders in the finance industry in the United States can earn over $100 million a year. You heard that number correctly. So that means if you assume that income is a good basis for valuing human life, you'd say that one financial leader, one great hedge fund manager, is worth more than hundreds or thousands of police officers, nurses, teachers, social workers. And that's an insane conclusion. I don't think anyone would say logically that that makes sense. So there's a strong alternative to using income as a basis for valuing human life. And that's valuing all lives equally.
Okay, so valuing all lives equally would be fairer in this case.
Well, this is the interesting thing, and I promote it in my book. I'm very big on the idea that it is more fair to value all lives equally than to use income as a basis. And you heard about those enormous inequalities we have in income in the United States, as well as all the biases. So Kenneth Feinberg, who had managed the September 11th Victims Compensation Fund, he himself said that he thought the way he did it was unfair, unnecessarily controversial, and that it would have been better had he valued all lives equally when he did that fund. He had the chance to try it again. Years later, there was a bombing during a Boston marathon. About 4 people died. A fund was created of private money, no longer government money. He was in charge of it. He was told, distribute the money how you think is fair. And he paid the families of the victims the same amount, regardless of whether they were rich or poor, old or young, regardless of race or where they came from. Equality. But equality isn't just a principle in victims' compensation funds. Regulatory agencies tend to do the same approach. So, for example, when a regulatory agency like the Environmental Protection Agency is thinking about making the water safer, they have to specifically ask, how much is this going to cost industry, and what are the benefits in terms of lives saved? Less deaths. When they do that calculation, all lives are valued equally. That is, they use a number, back to your first point, the value of a statistical life. They use that value of a statistical life as the benefit. And whether you're rich or poor, old or young, no matter where you live in the United States, that's the amount that is credited. So there's equality that's built into some of our calculations, not all. Equality is not perfect. I hope we'll get a chance to talk about some of the limitations of that.
Yeah. But if we are to pay all people the same amount, in particular situation, whatever, even if it is the September 11 or another thing like that, if there are problems with all the methods that we use to arrive at the value of a statistical life, how would we determine that amount? To be fair?
That's a great question. And the amount is critical because if the number is very low, then lives are not well protected. If the number is astronomically high, you're going to put a lot of companies out of business, and then as the economy craters, you might trigger even more deaths. Right? So it does matter. The calculations in value of statistical life, yes, they're problematic. But the final resulting number is probably reasonable. Order of magnitude. Now, when I say order of magnitude, that means, okay, fine, plus or minus 50%. It's probably close enough. If you used a number like $100,000, what would happen? Well, companies would say, I don't have to worry too much about putting in consumer safety. I'll just pay off later. Regulatory agencies would not invest a lot in safety. Now, flip it around. If the number was $100 million, then companies would be so invested in safety that the cost of their products would be so much higher. I'll take an example for you so we get a little flavor for it. In 1984, there was a settlement for the Bhopal, India disaster. Chemical leak caused the death of about 4,000 people. Tragic. The settlement was about $60,000 per victim. 60. Now that's not a lot. Fast forward in time to just a few years ago. Toyota Car Company was aware that they had a problem with their acceleration system. They chose to not repair it. Less than 100 people in the United States died. The settlements, regulatory fines came out to about $20 million per victim. So on one hand, in Bhopal, India, $60,000 per victim. Now granted, that was 1984. Fast forward in time, we now have about $20 million per victim. Geography makes a difference, the United States versus India, but by putting that particular number out there, $20 million, it sends a message to every car company. If you know there's an issue that threatens the life of the drivers and passengers in a car and you don't fix it, we're going to hit you with a bill of about $20 million per preventable death. And that really makes them invest a lot more in safety. So maybe the current number being used in the United States, 10 million, maybe it's not perfect, but it's a lot better than previous numbers that were used, because if you go back in time, they did it based on income. And as we talked about with income, there's all these unfairnesses, and it's a much, much lower number. I'm venturing to guess that most people you know and I know are not earning $10 million or in their lifetimes.
No, certainly not. Okay, so you already mentioned that. For example, when we were talking about the September 11th disaster, let's say, let's call it that. You were mentioning that it was government's money that was used to compensate people who have lost people that were a part of their family or things like that. Is there any difference between how a value of a human life is calculated in the private and the public sector?
There is. So, from the government point of view, like a regulatory agency, they value all lives the same, using that value of a statistical life, right? Equality is truly the principle. From the point of view of a private sector company, and I've done a lot of work in the private sector, they do a financial calculation, a cost-benefit calculation, where they try to look at what is the costs of, let's say, improving safety, and then what are the benefits. And the benefits in that case are they're avoiding fines, they're avoiding lawsuits. So they have to estimate how much are they going to lose in a lawsuit. And when they estimate how much they're going to lose in a lawsuit, they might use some history. Well, we're in similar lawsuits. But they know that in civil court, very often, there's a lot of factors that play into it. And the factors that play into it can include someone's income. It can include something called punitive damages. Punitive damages, especially in the United States, can be enormous. That's a way that the jury punishes the company in addition to the direct damage they cause to send a message to them and the rest of the industry. So when they do these calculations, a company's looking at their private costs, what happens to their money. The government is looking at a public view. And when you do this cost-benefit calculation for the private sector, you're looking at your own cash flow. And how much am I going to have to pay later? And when I look at how much I'm going to have to pay later, I have to think about not only the regulatory fines, but civil court. And civil court has lots of factors that play into it. The state matters. And we can talk a little bit about some civil court judgments and the incredible disparities we have with that as well.
Yeah, there are many instances where these calculations apply. Let's talk a little bit about the criminal justice system because that's one of the areas where there's discrimination, right?
Certainly, and we have a principle that justice is blind, and I think every country wants to promote the idea that no matter who you are, you will receive the same fair justice system, right? Rich or poor, older, young, influential or not. But that's not the real world. And in the real world, who you are matters. In our particular case in the United States, I like to think about the specific case of vehicular manslaughter. So vehicular manslaughter is someone's driving a car, an accident happens. Maybe they drive over a bicycle rider or a pedestrian, or maybe they crash into another car. Someone is killed. Accidents are fairly random, right? They might happen somewhere on average closer to where you live, but who the victim is a fairly random process. And so the punishment that a driver receives should be independent of who was killed. After all, these are fairly random processes. I don't know the victims. There's no intent involved. Yet, the data shows that in the United States, if the victim was homeless, the punishment on average is much less. If the victim was black, on average, the punishment is less. Now, there's no justification for that. There's no logical reason why the punishment should be impacted by who the victim is. After all, these are fairly random, acts, fairly random crimes. So that's one example where some lives are valued much more than other lives. And that's on the criminal side. There are other examples as well, but the civil side has some other exciting examples too.
So could you give us some of those examples?
I'd be happy to. So on the civil side, here, civil side is about dollars. It's about money. In the criminal cases, the state, the government, sits on one side of the court and the accused sits on another. But in a civil case, it's individuals or companies, private sector, suing each other. A great example is Cheryl Thurston. Cheryl Thurston was an inpatient in a care facility in New York. She was unable to bathe herself. She was supposed to be watched at all times. The care facility was negligent. They did not watch her. When she was in a bath, she slipped into a coma and died within 24 hours. A tragic death. Her sister sued the care facility. The judge determined that the care facility was negligent. After all, they failed to do the job they were supposed to do. But the judgment was for $0. $0 because in New York state law, there was no intrinsic value for human life. Cheryl Thurston was not earning money, she was costing money. She was an inpatient at a care facility. And the judge even said, it is tragic to know that had Cheryl been chattel, like a cow or a chicken, then her sister would have been entitled to money. So $0 for her life. Transfer over to California, in the famous O.J. Simpson case, Nicole Simpson, Ronald Goldman, in the civil case, O.J. Simpson was found guilty. The settlement was for $33.5 million. So $33.5 million for 2 lives. In that case, $0 in the Cheryl Thurston case. Incredible inequalities in how much a human life is valued.
And in terms of the health system, I mean, in the book you also talk about the trade-offs between, for example, preventive medicine and curative medicine. How do things work in that domain?
Yeah, so in general, when you start looking at the return on investment for investments in health, you can do a similar calculation. You can ask, how much does it cost for providing certain care? What are the benefits? The benefits, of course, are related to reduced deaths and illnesses or sickness or injuries. Now, when you do that calculation, you can ask which treatments are most effective. And you can measure that based on the cost per life saved or the cost per life year saved or the cost per quality adjusted life year saved or disability adjusted life year saved. I just talked about 4 different metrics. Which metric you choose will then change which life you decide to save. So, for example, preventative medicine on average is very cost effective. So, if you are able to prevent an inpatient hospitalization or a major injury through some basic care, that on average is going to be far more cost effective, the dollars spent per whether it's life years saved or disability adjusted life years saved, than the treatments. On the other hand, someone shows up in your emergency room, you have to care for them. So health systems would like to focus on prevention to the extent they can and avoid treatment, because usually it's far more cost effective. But the metric matters, and if you choose one metric versus another, you may find yourself saving one person's life and not another.
Mm-hmm. And in the US, at least, there are significant racial and gender pay gaps. How is that relevant for our conversation?
Well, the pay gaps really play into any situation in which you're using someone's income to value their life. So, as we talked about earlier, when you have a pay gap, and let's stick with the gender one because it's very well established. Mm-hmm. So, let's say on average, I'll make up a number for now, we'll call it 10%. Let's say on average in a particular part of the country, men of equal education, experience, etc., get paid 10% more than women. On average, that means in a judgment which is based on income, injuries to the man, loss of life to the man would result in settlements that are substantially higher. Now, is that fair? I would say no. The original inequality in the income was unfair. So you have a choice. You could, in your calculation, correct for the inequalities, adjust for racial disparities, income disparities. By the way, there's also age disparities and location disparities. All right, so an extremely talented 21-year-old will often get paid only a small fraction of a, let's just say, talented 48-year-old. Well, there is some credit for the experience, the efficiency, other things that, an older worker could bring to the table. But if they're doing the same job function, let's say they're both Python programmers and they're doing the same exact tasks, you could challenge why should there be a huge gap in salary. So it's the experience increment. So anyway, the point is that with these different inequalities in income, you have to then decide, are you going to try and adjust back when you value someone's life? Or you're just going to let those inequalities continue into the calculation of how much a human life is valued? My argument is that with the huge disparities that exist in income and the known inequalities, it's safer to start with valuing all lives the same and then make adjustments if necessary. And I say that make adjustments if necessary because it's not so simple to just state, well, all lives are valued equally. After all, am I going to line up the Nobel Peace Prize winner with the triple homicide murderer and say, I need to protect both lives equally? Probably not. And in the real world, there are some lives where the government is invested in protecting their lives more than other lives. State actors, politicians, police, those who represent the government are protected far more legally than those who don't.
Mm-hmm. So when we're thinking about how people value human lives, in this case in terms of the job market or something like that, or the different jobs that people have, is the problem here really the gap, the pay gap that exists between different genders, different races, or is it the fact that even if there's that gap, people use it to value human lives differently? Because I was just thinking that maybe some of that gap would be explained by factors other than discrimination.
Well, it's an interesting point. The gap that I'm referring to, that's after controlling for things like education, experience. So it's not, if you look at it on an aggregate, right? If you just say, I'm just going to look on an average and not control for factors that should influence, then you get a false conclusion. So this is after doing those controls, you still see substantial gaps. That's the gap I'm referring to. And then you're absolutely right. The issue is that if I'm underpaying people and then I use that underpayment as a basis for valuing life, then the lives that are less valued are less protected. You know, go back to our example of Bhopal, India versus the Toyota acceleration case. The message that was sent to companies about the Bhopal, India settlement was, don't worry, you're not going to pay a big fine. Versus if you did this type of thing in, let's say, the United States, your company will be financially ruined. You will be done. So the message sent about how much you have to pay matters. And this is a principle. So if you say that the income gaps, let's say the racial pay gap is about 25%, that's a major, major amount. And if that's going to influence how much a company invests in safety or is concerned, that's a major deal.
Mm-hmm. There are other situations or domains where this also applies. I mean, where people also sort of calculate the value of a human life, and one of them is life insurance. And I mean, we have insurance companies, and there's different kinds of insurance. Let's talk about life insurance now. I mean, how do things work there?
Well, you know, life insurance is one of the ways that people first think about valuing human life. Right? If you ever have to think about taking out life insurance on yourself, it's a very humbling process because there are ways to calculate what should your coverage be. So there's something called the replacement need, right? So if Howard gets hit by a bus on his walk home today, how much does my family need in order to continue living the lifestyle that they're used to living at, right? Sum that up over time. That's one. There's another one, which is how much is the loss of income? They're not necessarily the same, right? They could change their lifestyle a little bit. So you've got these need calculations. You've got the replacement income calculations. So that's it. Howard got hit by a bus on the way home. How much do I need to replace his income? The truth is, though, most people don't do those calculations, and quite frankly, they're very depressing. I'm going to tell you that to begin with. You look and say, wow, I'm going to be working a lot of more years. What you typically end up doing is people pick a number that feels good. Maybe it's $500,000, maybe it's $1 million, maybe it's $2 million, and they look at what is the monthly premium. How much can I afford to pay? And affordability in terms of the monthly premium becomes the primary driver. So the thing about life insurance is it's a business. It's a competitive business. So instead of being this theoretical calculation, like the value of a statistical life is sort of this theoretical calculation, it's real. You can go on the market, buy life insurance. You can see how much it'll cost you. So it's a tangible product. How much is your life worth? Well, you could do that calculation. What your family will need to have the life that they want, or what does it take to replace your income? But most people just say, this number feels good enough and I can afford to pay the premium. And that's how it works usually in the real world.
Yeah. And what about life insurance? Not life insurance, sorry, health insurance. Because what are the factors that people pay attention to when calculating life insurance, and is there also discrimination there?
Well, so health insurance is a complicated topic because the United States has really a combination of different insurance, right? We have government-funded insurance, or Medicare. The government pays for it. People don't calculate it. The government has to think about, do they want to cover certain things or not? Governments like the United Kingdom, they have a cost effectiveness threshold so that a new drug or treatment has to be more efficient than other treatments, and it has to be it has to reach a certain barrier, right? If it's going to cost $10 million to save one life year, to add one more year of life, they're not paying for it. The United States is a bit more complicated, but our government does at least have its own approval system that's focused on safety, not necessarily costs. Private insurance definitely looks at the cost effectiveness, how efficient treatments are. And if something is, once again, $10 million to add 1 year of life, they're not paying for it. They're going to do that calculation. We also have out-of-pocket. So if you happen to be sitting on a few $1 billion, you can pay for any treatment you want. That's true everywhere in the world, but the U.S., compared to other wealthy countries, has a much more prominent private sector healthcare system. And then lastly, we actually have government-provided healthcare. So for the military, where the people who provide the care and pay for it are all employees of the government. So we have a whole mix. Some of these groups do serious cost-effective calculations. Like, for example, the private sector health insurance companies, they need to figure out, are they going to provide this care or not? What's going to be the first option, the second option that they recommend? They have what's called tiering. What's the first tier drug? What's the second tier drug? So they do this work, these analyses, and it's all about trying to figure out, for them, how can they provide care that meets a level of quality while still making money, because these are highly, highly profitable companies.
Mm-hmm. So, I mean, we've been focusing on the United States and how things work there, but this also applies to all other countries, right?
Well, health insurance certainly exists. Many countries have national health insurance plans. Pretty much all the national health insurance plans take some consideration into the cost effectiveness. How much does it cost per usually life year or quality adjusted life year that is extended? So that calculation happens in most countries. Some of them will use the calculations done by another country. So they'll say, okay, well, this is what they found. In my book, I describe the UK in detail. I also describe Thailand, for example, where there's many, many dimensions they look at. One of the dimensions is the cost effectiveness. It's not the only dimension.
Mm-hmm. And are these values, I mean, the value that we attach to a human life in the health system or other instances, I mean, is this an official number? I mean, can we find it somewhere, or
Yeah.
or is it, or when you talk about, for example, the value of a statistical life in your book, is it something that people can calculate if they take into account, I mean, what people get in terms of money when they are exposed to this or that kind of situation?
So the first thing is, a lot of this information is publicly available. So if you want to look up what is the value of statistical life by the different agencies, Google it, it's there. I mean, I mentioned my book, it's pretty much the same in the United States for the different regulatory agencies, about 10 million, but you can Google it, it's all publicly available. Usually these figures that are used by your government are publicly available because it's very important for advocacy groups, human rights groups, to be able to scrutinize what the government's doing. And I think that's very important. You need a counterbalance. You don't want to just have technocrats calculating these things and not having the rest of society be able to look at it. So they are publicly available. The thresholds that are used by governments for health insurance are usually some multiplier of GDP per capita, the wealth of the country. So if you're in a country who has a GDP per capita of, let's say, $40,000 per year, and you then say, I need it to be as efficient as at least 2x the GDP per capita, that means your threshold is at $80,000 per year. But the thresholds are usually publicly available. So, you probably could dig into, whether it's Portugal or a different country, and should find this information online. Most governments keep this as something that people are aware of, and advocacy groups, human rights groups, they want to be concerned. They want to know about it.
Mm-hmm. Yeah. And since we're talking about health, I mean, we're going through this pandemic now, the COVID-19 pandemic. I mean, there's these kinds of issues that we've been talking about. I mean, how people might acquire or not health insurance and the value we put on human lives. Does it also apply to this situation?
It certainly does. It and we've seen lots of inequalities in terms of who is more exposed based on their job. Uh, Race plays into it, demographics play into it, but besides that, who gets care first? In the early days of COVID, you heard about celebrities and sports stars who had been identified. I'm going back to early March.
Yeah.
It was Tom Hanks and NBA players who were all COVID positive. But myself, I had very severe symptoms. I was not allowed to get a test. I was told, I'm sorry, there are very limited tests and you will not be tested. Quarantine. My life was not as valued as those celebrities. That was the way the situation was. Now tests are much more prevalent. It's a lot easier to get them. But this was very explicit. Now, as we continue to look at the trade-off that's happening in many countries, there were these closures, these shutdowns, dramatic impacts on the economy. And of course, a trade-off. You're trying to not only prevent illness and death, but also trying to long-term be able to reopen the economies. Mm-hmm. So the regulatory industry has a whole toolkit of doing cost-benefit analysis. But the but is it's not prepared for a situation where there's so much uncertainty in the science and the impact is on this scale. So is there a framework for how to think about it? Yes. Can they just plug in what they know about COVID and get an answer? Not really. That said, the order of magnitude that many countries have experienced in terms of economic impacts due to the shutdown is about what you would expect for the lives that they've saved when you use things like the value of a statistical life. What I mean by that is, in the United States, if you did nothing, you'd probably have, who knows, maybe 1 million people dying of COVID, maybe more. The amount that's being saved times the value of statistical life is about what was the impact so far on the economy. It's measured in tens of trillions.
Mm-hmm. So does this tell us anything about what would be the best strategy for countries to follow, in this case the United States? Because, I mean, we have to take into account perhaps how many people would have died if you didn't put into place any containment measures, but we also have to take into account the toll that it has on the economy.
So the truth is, in theory, that's how they would do it. In practice, no country's doing nothing, right? There is no counterfactual of, we'll just totally ignore the situation. So it becomes a question of severity. How to open what elements of society at what time in what phasing. Some of this can inform, but once again, the science is not as clear as what regulatory agencies are used to. And let me give you an example. Regulatory agencies, they're used to looking at, if I make the water safer by reducing the arsenic in the water, or make the air cleaner to breathe by reducing the amount of pollutants from a factory, what would be the impact? They're not used to dealing with this broad societal calculation. So I think it's a little, it's a structure that they could think about, but they don't have the tools to do it.
Mm-hmm. Okay, so let's change topics now and talk about having kids, because that's another major decision that people make in their lives, and there's also a cost associated with it.
There is, but to be perfectly honest, some parents think about that calculation. What is it going to cost? How am I going to care for my child? That's a thought some parents have, and other parents don't. So I wouldn't say that every parent sits there and does these types of calculations. What we have seen over time is that as people have choices and access to contraceptives, on average family size is decreasing, and parents are investing more time and more assets in the less children that they have versus previous generations. But that said, I kind of joked about it in the book. It would be a very unusual set of parents that would roll out a spreadsheet at a family gathering and talk about the cash flows associated with and not having children.
Yeah, but even if they are not thinking about it consciously, let's say, I mean, if people, even if it is unconsciously, do people sometimes take into account, for example, how the economy is doing and their current financial situation when they think about having children?
There is some of that, and in fact, some countries have tried offering stimulus to couples, so to encourage them, for example, maybe to have children. And in some of those countries, what they've seen is couples who were planning on having children may have them a little earlier, so a little bit of a kind of pull forward. So there is some of that. Not all couples, some couples. Once again, it's very dependent. I think I'm pretty sure my parents didn't run any fancy calculations when they decided to have me.
Yeah, let's hope not. Okay, so just two last questions. The first one is, what happens in a situation of war? Because in war, usually there are people that are put in the front lines and some of them might die. So how should we think about that in terms of the value that is put on human lives in that case?
Yeah, war is an extreme example. It's extreme in the sense that, and we're talking between countries now, where the country that is invested in the war also invests greatly in diminishing the value of the enemy's life, right? It suddenly, I kill someone, it's murder. Put me in the handcuffs, I'm going to jail for decades. And that would be happening unless it's on a battlefield. And on a battlefield, if I kill my country's enemy, instead of it being murder, I can become a war hero. I can be celebrated. I could get medals. I might end up moving into a different area of life because of this, what would be considered in civilian life a murder. So the value of your enemy's life gets dropped not only to zero, sometimes it's even a negative because people are rewarded for killing. So it's a real, reversal of how humans normally think about human life. And it requires people to truly believe that what they're doing is necessary and that the enemy's life, the destruction of the enemy's life, is necessary and beneficial. So it's a situation that's so different from any other typical situation that we're engaged in that it's worth reflecting on. And I spent a little time in my book focusing on the U.S. history in war because we have an extraordinary history. We have, of course, a lot of wars in our existence, and we have these very high kill ratios. Kill ratio is how many enemies die versus how many American soldiers. We invest a lot of money in technology in ensuring that we have a very, very strong military that also puts American soldiers' lives at minimal risk. So there's some clear decisions being made in U.S. government and U.S. history about how we view war.
Mm-hmm. So people try to minimize the risk of soldiers dying, at least the US soldiers. I'm asking you that because since you mentioned that enemies' lives are diminished in value, I was just thinking about how the government thinks about their own soldiers.
So it's interesting. The government actually has a policy for how much they pay for the death of a soldier. Back to our point about equality, it's about the same regardless of rank. General or private, the family gets about the same amount of money. So somewhat, not exactly, but about the same. So there's an equality principle. But the investments that they're making in avoiding putting soldiers at risk is higher and higher every year. This is the reliance on drones and other things where American soldiers are not put in harm's way. So there's clearly an investment that's been going on with that more and more over the past decades, over my lifetime.
Mm-hmm. Okay, so my last question will be, you've already touched on this a little bit, but why do we need regulations in capitalist societies? And I mean, why isn't any true libertarian society out there?
Well, it's a great question. If you take the extremes, right? There is no pure capitalist society. There's no pure democratic society. There's never been a pure communist society. Some things are just, they are theoretical elements. But back to the point about regulations. So if you simply had a situation where a company had no regulations are like the minimum standards that a company is required, then if you also simultaneously did not have a high value on human life and didn't have the court system to enforce it, then basically you'd have a race to the bottom. Companies would just put out whatever dangerous products exist. Consumers would have to get themselves aware of how dangerous the products are and then decide, is it worth my risk or not? So the regulations provide a minimum level of safety, a basic understanding of how much you should be able to trust the product, regardless of where you are, where you purchase the product from. And it's really to avoid those races to the bottom, because if you don't have the regulatory system in place and you don't have these basic safety mechanisms in place, what you'll have is lots of people who incur unnecessary injuries or unnecessary deaths, and then they have to go, or their survivors have to go to the court system to try and seek justice. And maybe the court system has a systematic approach to it, maybe not, but the whole thing would be far more efficient if you just had basic rules in place to begin with. So you're still relying on the government. You still have to go to the court system to settle for the accidental death anyway. So you haven't eliminated the government.
Mm-hmm. Yeah, I asked you that, and it's important to discuss this because there are really people out there that believe that it would be possible for us to have a true, let's say, laissez-faire market capitalist society with no government at all, because, I mean, they say that different companies would compete with one another and people in the end would eventually select the best ones, and the people would force them to have regulations or something like that. But that
so this is the gap,
feasible.
right? So first of all, how many hundreds of thousands or millions of people would die, and then in the end they still have regulations. They just say they'll spontaneously form out of nothing. What you'll find is that, and I mentioned this at the beginning, every political system has an extreme theory. There's an extreme theory for communism. It never existed. There's an extreme theory for perfect socialist systems. It never existed. They're all some mixture of some capitalism, some socialism, and for folks who want to promote an idea of a government like that, or a minimal government, they always invoke something else later. They always create, for all these social goods that are needed, they just spontaneously happen. So you need an explanation for where they spontaneously happen. And so I would say, great, show me examples.
Mm-hmm. Yeah, yeah. I mean, it's very tricky, but I mean,
I'm a data scientist. At its core, I'm a data scientist. I analyze data for a living. So I say, great, show me the data of where this exists, where this works. And that's true for any system. So you brought up libertarian, but I think just taking in general, I say, show me the evidence, show me the data. Because I'm not a theoretical person. I live in the real world, and you recognize that in the real world, people act out of some self-interest, some generosity, but the whole idea of a successful system, ideally can capitalize the engine of growth of capitalism whilst avoiding its negative influences. The things like the race to the bottom. But we'll leave it at that.
Yeah,
show me the data. Show me the data might be the take-home message here.
Yeah. Okay, so let's end on that note, Dr. Friedman. And people, again, the book is Ultimate Price, The Value We Place on Life. Would you like to mention just some places on the internet where people can get in touch with you and your work?
Yes, I'd be happy to. So I'm pretty active on LinkedIn, and you're welcome to follow me on that. So my name Howard Friedman, Columbia University. So I do a lot of work there. I have a Twitter, Howard S. Friedman, which mostly I send out links to my LinkedIn feeds. So you can certainly get in contact with me those ways, and I'd love to hear from you.
Okay, great. So I will be leaving links to that in the description box of the interview so that people can go and check it out. Your work is very interesting, by the way, and I really loved the book. And Dr. Friedman, again, thank you for taking the time to come on the show. It was a real pleasure to have you.
Oh, thank you very much, Ricardo. I really appreciate it. It was great chatting with you.
Hello, everybody. Thank you for watching this interview until the end. I've started this channel back in February 2018 and have been putting out regular interviews with academics and intellectuals from a variety of fields. And I would really like to keep doing this in the long run. And so please visit my Patreon page and consider making a pledge there, or go to my PayPal links in the description box, and you can also make a monthly pledge there, or a one-time big donation, or several times big donations. It's as you prefer. Otherwise, and if you like what I'm doing, please share it, leave a like, and hit the subscription button. Finally, I would like to give a huge thank you to my patrons and supporters, the main ones: Karen Litska and Blanchett, Parerga Larson, Lau Guerrero, Francis Ford, Hans Frederick Sunda, Ricardo Vladimiro, Craig Healy, Adam Kessel, Olaf Alex, Jonathan Wiesel, David Diaz, Anjan Kata, Jacob Klinkby, Matthew Whittingbird, Arno Wolf, Tim Hollesy, Eric Alenius, John Connors, Paulina Barron, Philip Force Connolly, Jerry Mueller, Herbert Gintis, Rutger Voss, Bo Weingard, Rebecca Newberger Goldstein, Dan Demetriou, Robert Windegar, Rui Inácio, Arthur Coe, Zoop, Marco Neves, Max Bailby, Colin Holbrook, Susan Pinker, Thomas Trumbull, Bernardo Seixas, Pablo Santurbano, Simon Columbus, Jorge Pinha, Phil Kavanagh, Corey Clark, Mark Blythe, Roberto Inguanzo, Michael Stormir, Eric Neumann, Samuel Andreev, Tiago Nunes, Bernard Ugni, Alexander Dunbauer, Omari Hickson, Felicia Stevens, Fergal Cusson, Evan Bodrenko, Al Herzog, Nuno Machado, Don Ross, João Alves da Silva, Jonathan Librant, Oslam Bullitt, Nathan Nguyen, Staten T, Samuel Correa, Eric Hines, Mark Smith, J.W., João Eira, Tom Hummel, Sardus France, David Sloan Wilson, Yacila Deza Araújo, Eden Solon, Romain Roach, and Dmitry Grigoriev. My producers is our web, Jim Frank, Lucas Stafiniak, Ian Gilligan, Sergio Quadriano, Luis Caetano, Matthew Lavender, Tom Van Egdam, Curtis Dixon, João Linhares, Benedict Mueller, Vega Guidi, and my executive producers Michel Rugieski, Rosie, and James Pratt. Thank you for all.